Hello, thank you for joining us for the 6056 reporting tool and tracking information for the plan year of 2017. This presentation includes information about Mattock Associates and myself, Dave Maddock. We're going to explain who needs to do this reporting. We're going to talk about the forms that need to be reported. We'll talk about the affordability and safe harbor discussions. We're going to go through a tool that we've provided to help generate these forms for you and track your employees throughout the year. And then we're going to finally talk about deadlines and where to submit these forms. So who Mattock Associates is, we're your insurance broker. We work on your behalf to help you maintain a good employee benefit programs. Our goal is to help your employees have a smooth plan, resolve claims issues quickly for any issues that come up, answer benefit questions, effectively and professionally communicate the benefits to your employees, and then really to help all our clients stay in compliance with the rules and regulations when offering employee benefits. And then finally, our most urgent goal generally is to try to help our employers keep these benefits affordable year over year. So Mattock Associates, that's me. I've got a degree from from University of Washington, as well as American College specific in employee benefits. It's a registered health underwriter degree. Got a certified consumer-directed healthcare from United Healthcare, and then I'm the past president of the Washington Association of Health Underwriters, and I recently just retired, I'd say, from the Washington Health Plan Advisory Committee. So a disclaimer before we go in here, this presentation in detail, it's important to understand Maddock Associates, we're an employee benefits broker. We're experts in employee benefits. We're not a tax accountant. We're going to be reviewing a tool that we have given to you to create tax forms, but it's important to understand that the information that you use in the tool is all your information, and the tool can generate tax forms for you. But it's extremely important that you have your accountant review your tax forms and all the data you provide before you submit to the IRS. The tool and Maddock in no way is taking on liability for generating these forms for you. This is an excellent tool, helps you organize all the data the government requires, and helps you in a quick way create all the forms the IRS requires. So I'm going to move into the presentation. So this reporting, this is a large group reporting we're talking about in this webinar. We call it the 6056 reporting. And basically all companies over 50 employees are required to do this reporting, whether you're self-funded or fully funded. The amount of information varies a little bit depending on whether or not you're fully insured or you have a self-funded plan. But basically the 1094 and 1095 reporting groups over 50 employees, and this presentation is focused on companies with over 50 employees, are going to be doing the C reports. It's the 1094 and 1095C reports. You'll also hear about and may receive 1094 and 1095B reports. The B reports are the reports that actually explain who was insured on the plan. And for fully insured companies, the insurance companies generates those B reports, the 1095B reports, and sends them to every single employee. The C report is generated by the employer, and the C report explains not necessarily who enrolled in plans, but it's more about what coverage was offered and what the cost of that coverage was. And it's up to the employer to send the C reports to all the employees as well as the IRS. For companies that are self-insured, they create the C report and they include information that would be on the B report on the C report and send that to all the employees. So employees of self-funded plans just get one form. It's just the 1095C. That includes both what the employer offered and what coverage was enrolled in. Employees with plans that are fully insured will get two reports, the 1095C from the employer and the 1095B from the insurance company. So there's two different forms. The 1094, that's a summary report for the company, and that goes to the IRS along with all of the 1095 reports. And so you'll generate a 1095 report for each employee. And that indicates the whether the coverage was offered, and the price. The deadline for reporting using paper forms for the 2017 plan year is the end of January to the employees, and the end of February to the IRS. So essentially, the IRS wants you to get these 1095-C forms to all employees no later than January 31st, 2018. And then you have until February 28, 2018 to get the forms to the IRS. Basically, once you generate the forms for the employees, all you need to do is a 1094, which is one form for the IRS. So really, January 31st is the big deadline. Once you get to the employees, usually just send a copy of everything, of all those forms, along with the 1094 to the IRS. So you want to just probably do it at the same time. So really important thing is to understand, if you're not self-funded, either way, if you're fully insured or self-funded, you got to understand if you're over or under 50 employees. If you're under 50 employees and you're not self-insured, then you don't need to do this reporting, and that's great. So that's pretty simple. If you have under 50 employees on average on your payroll, then you know for sure you're under 50 employees. If you have over 50 employees on your payroll but you're close and you have part-timers, then you might need to do some detailed calculation to figure out if your full-time equivalent count is over 50 employees. And if you consistently have over 50 employees full-time for your company, then it's pretty basic, that you're over 50. So this slide, I'm going to talk about how you would calculate whether or not you are over or under 50 employees if you are close, if you need to do this calculation. So what you need to do to determine, let's say you have 60 employees, but you've got quite a few that are part-time that aren't eligible. So you're not sure if you really count as being over 50 full-time employees or not. So here's how the calculation works, and we actually have a detailed spreadsheet we can provide you where you can put in all your employees, all the hours for every single month to do a real detailed calculation. So if you need that tool, let us know. We can definitely get that out to you. And we have sent them out to all our clients at the beginning of this year, trying to catch people that have been growing to give them a heads up that they need to do this reporting. But anyway, for each month, what you do is you count all your full-time employees that work over 30 hours per week, and they count as one person. So you're going to have, for each month, you're going to have kind of two columns, the full-time employees. And so for full-time employees that work over 30 hours a week, each person counts as one. It doesn't matter if they work 60 hours a week, 40 hours a week. If they're over 30 hours a week, they just count as one full-time employee. Then for all the employees that work under 30 hours a week, then we have to use a formula to get your full-time equivalent count. So what you do for all those employees that are working under 30 hours a week, you add all of those employees' hours in a month, and you divide that by 120, and that will get your full-time equivalent count. So for each month, you're going to have a full-time count. That's all the employees that work over 30 hours a week. And then you're going to have a full-time equivalent count, and that's it would be a number, which is the number of hours of the people that work part-time divided by 120. When you add those two together, that's going to be your employee count for the purpose of healthcare reform. So what you do is you add the full-time plus a full-time equivalent for each month, and then at the end of the year you divide by 12. If that average is over 50 in the year, then you're considered to be a large employer. If you're close, we recommend you have your accountant review your calculation to double check. There are some exceptions for employers that have real big swings for seasonal employees. Maybe you just have a 1 month of the year where your employment spikes to pick crops. There are some exceptions for that, but in general, this is how you determine whether you're full time, whether you're over 50 or under 50 employees. So just to recap, what you're doing is if you're over 50 employees in 2016, that means you have to report for 2017. And then we do the reporting here in January of 2018. So you're always kind of looking ahead. So we have some employers that are growing, and let's say they just turned over 50 employees, and their average for their first year averaging over 50 employees is 2017. That means they'll have to report in 2018. They don't have to do the reporting this January. They'll have to do the reporting next January. So anyway, give us a call if you're in the middle there, you're confused about whether you're over 50 or under 50. We can get you a really good detailed tool to help you dial that in and answer your questions. So before we get into the tool on how to create the forms, I like to actually go through the forms so you know what the goal is. So what we've got here, the 1094 form is right here, and these are all on the IRS website, and we'll be attaching them to the email here. So this is just basic information about the employer, and ALE is applicable large employer. So you're an applicable large employer if you have over 50 employees for your company. So you basically just include the information about the company. If you're a government entity, there's some information there. And then name a person to contact. That's important to put that information in. That's whoever basically is doing the forms here for your company. And then this form will go to the IRS with a copy of each 1095-C form. So you're going to indicate to the IRS how many 1095-C forms are going with this report. And then generally it asks if this is authoritative transmittal. If you're only submitting one 1095-C form, which most everybody does, you'll check yes, it is. And then the part 2, this is total number of forms on behalf of the ALE member. So there's sections on this form to talk about if your company is combined with other companies. So we'll go through that in a little bit more detail. But if the owner of your company owns other companies as well, then for IRS purposes, you're all treated as one big company for reporting purposes. And this form would be where you could indicate the other companies. So if that would be the situation, if you're part of an aggregate group. So let's say you're a restaurant. The owner owns 20 restaurants, but he has them all as different companies. If the same owner owns all 20, they're all going to be part of the same group. And so what you do is you check yes there, and we would on this form indicate the other 20 restaurants. Section 22, if you offer coverage to everybody, employee and family members, and it's less than the federal poverty level, you can check A. I'll explain a little bit more about that later. And then this is information here about whether or not you offer coverage, minimum essential coverage. Most people offer it all year. This section here talks about the employee count and the total count. So the B would be the count based on our full-time equivalent calculation we just talked about. So this is the full-time equivalent count. And C would be just the total people on payroll. And this would be to indicate whether or not you're part of an aggregate group. And then section 4 is where you would indicate all the associated groups. So if you're, in that example, if you're part of an if the owner of the company owns multiple companies, then you would want to list them all together here. If you're unsure about whether or not you're part of an aggregate group or not, you want to ask your accountant. They will know. The next form is the 1095-C form. This is the form that goes to each employee. And once again, this is on the IRS website. And so, oops. So here, part 1 is going to be the employee information. Part 2 is the information about each month, whether or not you offered coverage. Section 15 is the cost of the coverage you offered. Section 16 is a safe harbor code, and that's generally where you put down the reason why you didn't offer coverage. And part 3 is for covered individuals. This is only required for self-insured companies. As I mentioned, if you're self-insured, this form will be the only one that goes to the employees, and this section 3 talks about who is covered or not. For companies that are fully insured, they do not fill out section Part 3, and the insurance company sends a 1095B form, which includes the information about who is covered in Part 3. So on the surface, it's pretty basic. Just employee information each month, whether or not you offered them coverage, what the cost of the coverage was, and then the safe harbor is kind of reasons why you wouldn't offer coverage. So, for example, January, maybe the employee didn't offer him coverage. You'd say you didn't offer him coverage, and then Section 16, there's a code explaining why you didn't offer him coverage, and that would be because they didn't work there. A couple of things about this form: if somebody never works full time for your company the whole year, then you don't need to get them. You don't need to report for them. You don't need to create the form for them. And as I mentioned, you have to print and mail this form or securely get it to them electronically that can be verified by January 31st. So part of what's really important to understand 2017 is the affordability numbers. So part of healthcare reform says you have to offer coverage that's affordable to the employees. And if you don't offer affordable coverage, you have to pay a penalty to the IRS. They started out defining affordability at 9.5% of the employee's household income. However, that's been indexed to inflation. So for 2017, the affordability number is 9.69% of an employee's household income. The federal government created some safe harbors for the employers to estimate whether or not their plans would be affordable, because they understand that the employer has really no idea what the employee's household income is. You don't know what the spouse makes or whatnot. So what they've done is they created a couple affordability safe harbors where you can use just the employee's wage and determine based on that whether or not the plan is affordable. I should say wage or the federal poverty level. So the easiest and lowest denominator of saying a plan is affordable is the federal poverty level. This is a safe harbor code 2G. And so in most all states, they define the federal poverty level at $12,060. And so if we take 9.69% of the federal poverty level divided by 12 months, we get to $97.38. So if what you're charging an employee for your lowest cost plan for employee-only coverage is less than 97.38%, then you can use the federal poverty level. And that's pretty easy. It doesn't matter what the employee actually makes or what their hourly wage is or anything or how many hours they work. It's just basically if you know that your costs that you charge for employee only, so it doesn't matter if the other family members are not on the plan, it's just employee only coverage, and it's for your lowest cost plan. So you can offer, if you offer 5 different plans, you just look at the least expensive plan you offer. If it costs less than $97.38 for a single employee to take that plan, then you know that your plan is affordable based on the federal poverty safe harbor rules. If you charge employees more than $97.38 per month, then you want to look to see if some of the other federal safe harbor rules would apply. So the rate of pay safe harbor is the next easiest one to use. So what you do is you take the hourly wage of the employee, you multiply it by 130 hours, and then you multiply it by 9.69%. So you can use that to determine if your plan is affordable for somebody. So as I mentioned, you'd only use that if you're charging more than $97. If you're charging less than $97, you just go with the federal poverty level. But if you're charging more, then you want to look at maybe the employee's rate of pay. And the only disadvantage to the rate of pay is they don't allow you to use their actual hours worked. You have to use 130 hours per month. And for an example, if for minimum wage in Washington, it's generally $11 for most places. The rate of pay safe harbor is $138. So that's a kind of easy one if you're in Washington, and if you're under $138.56, then you know that you're charging less than what the safe harbor would be for minimum wage, and you're pretty safe just using this for everybody. The other way to use it is the W-2 safe harbor. It's 2F. And generally this could be a way to allow you to charge even more for employees, because W-2 would, you use box 1 of the W-2, and that allows you to calculate all their hours. However, sometimes it is also influenced by some deductions and so forth. And also you don't have a super good way of forecasting that W-2 because you don't know exactly what it is till the end of the year. So generally we recommend using the federal poverty level or the rate of pay safe harbor. But if you are charging a lot for the insurance, and you need to factor in more hours, and maybe they're not hourly wage, then you're going to want to use the W-2 safe harbor. So qualifying offer method. So there is a simplified way of reporting called the qualifying offer method. You can use it. You're not required to use it when you report. So this is kind of a nice thing. If you offer coverage and your lowest cost plan is less than the federal poverty level, the 9.69% of that, which is $97.38, and you offer coverage, minimum essential coverage, minimum value coverage to all the employees and spouse and children, then you can use this qualifying offer method. And when you use a qualifying offer method, it just makes it more simple. You don't have to actually report what you charge the employees on the 1095-C for the insurance. You could just tell them you offered coverage, it was less than the federal poverty level, and then it makes the reporting a little bit easier. When you use this code in line 22, when you use the code 1A on line 14, then you can skip lines 15 and 16. So this might make a little bit more sense when I go through the tool. So now what I'm going to do is jump over to show you our reporting tool, and this is a tool that we've given to our clients to help track and create the 1095 and 1094 reports. So this tool is in Microsoft Excel, and what it is, I pulled it up right now. So we call it the 6056 reporting workbook, and I created a sample one because I've put in some data about a sample company. So this is both a reporting tool plus very informational. So you'll navigate using the tabs at the bottom of the screen here. And you'll see there's even more tabs. Oops. And then there's also these tools on the left that will help you kind of step through the process. And then basically what it's doing is flipping you through the different tabs below. So we highly encourage you to read all the information, read the reporting directions, and also it's important to take a look at this disclaimer. As I mentioned in the presentation, this is a tool for you to use to create the reports. By using this tool, it doesn't mean that the reports are accurate or that you put in the right information. So it's important you really double check your information, have your accountant review before filing with the IRS. So the first tab where we start putting in information is the basic employer information. And so what you do is you scroll through, and then this is a general information. So when you first start using this tool in the beginning of the year, you might not know the answer to this, but this would be the total number of 1095 forms we're going to submit. So I've got putting in like 60. Indicate whether or not you're a designated government entity, and put no. This is where you'd indicate whether or not you're part of an aggregate group. So that's, as I mentioned, if you had other companies that were associated with yours through common ownership. And then this section here is if you're going to be reporting self-insured coverage. I'm going to check yes. Many groups are going to be no on this, but I'm going to check yes just so we can show you that feature. So then we go through the employer part. And all of these these information it'll say where, you know, this information is going to be mapped to the IRS forms. So it's kind of nice to know. You're kind of wondering, why am I putting this information in here? It'll say right there. So right here it says employer part 1 lines 1 through 6. And so if we look at the form part 1 lines 1 through 6, it's basically catching just the employer information. So that's nice about this form. It kind of goes through and tells you what you're doing every step of the way. So I've got super employer, contact is Chris, the HR expert. And then this is more detailed information about the employer. So Section A is the qualifying offer method. So I mentioned this a little bit early in the presentation, a qualifying offer method. You can use this, and right here it's kind of nice. All of these in this document, there's links and hyperlinks for tools. So if I click here, it's just going to pop me to another tab on this form, but it talks about who can use a qualifying offer method. So as I mentioned before, you can use a qualifying offer method if your cost of the plan is less than the 9.69% of the federal poverty level, and you offer minimum essential coverage to both employees and spouse and dependents. So if you're, I would say most of our clients are offering, minimum essential coverage. Pretty much everybody is, and then most all clients are offering it both the employees, spouses, and dependents. So essentially, if your cost is under the federal poverty level number, which we determined to be $97.38, if that lowest cost for employee-only coverage is less than that, then you could go ahead and use this method. So if we go back to where we were, sometimes you have to click on down below to get the different tabs. We're back to the detailed employer information. We could say yes if we could take advantage of that, or check no. There's also the 98% offer. This is an alternative way of reporting. I'm not going to explain how that works. So it's very rare, but some people use this and they find it a little easier to report that way, but it's almost more confusing than it's worth. So then part 3 is where you would indicate whether or not you're offered minimum essential coverage. And so assuming you offered good coverage all year, you check all. If you didn't offer coverage and just started offering coverage like part of the year, you just go through and put yes on the months you offer coverage, no on the months you don't. And then this is important to indicate your full-time employee count. So that, as we mentioned, that's your full-time employees plus the full-time equivalent number. And generally, you're not going to use the all button. I mean, if you have any turnover at all, you're going to have to go through and put down, your employee count for the year for each month. And I'm just going through like a company. You've got a couple of people coming and going every month. And then the total count, you might have part-timers and stuff, so, or people in the probationary period. So a lot of times that number is a little bit higher. I'm just putting in some fake numbers here, but it might make sense. You have some part-time people. You have some people that are in their probationary period. So this number might be a little bit higher than your full-time employee count, if that makes sense. So we mentioned this company is not part of an aggregate group, so we would say no to that. If you were, then you'd be able to put yes or no. And generally it's for the whole group, but sometimes there's acquisition, there's a sales mid-year, which would make it for part year. And then this transitional relief indicator, that's no longer applicable. So that's pretty straightforward. That's the employer information. As I mentioned, this document's really good as far as there's giving you background information on every single one of these boxes so you can learn more information. So now we're getting into the real fun part. This is the employee information. So this is the form. I mean, ideally, everyone's been doing this all year round. We send out email reminders telling everybody, you should be tracking all year round, but we understand life's busy, so sometimes you just get to it at the end of the year. So if you already have been doing this all year round, most all the information's the same this year as last year. So you should be able to use the Excel document you used last year. And if there's issues uploading it, then Allie at our office is really good at helping out, troubleshooting that, and we can help you out getting the data. So as long as you have the data, we can help you get it in the right format to upload and get the forms. So one trick about this form, this is where you're going to list all the employees. You're going to indicate whether or not you offered them coverage or not. You're going to indicate what the cost of the coverage was, and then you're going to indicate a safe harbor code if it applies. This gets really hard to use. Like who am I working with? So I want to show you a really good trick. This is use Excel trick. So what you want to do is you want to use the freeze pane so you can always keep the employees locked down here and keep this top row locked down there. So what you do is you click right here, you go to the top employee and you go, it's to the right of the column you want to lock, and just under the row you want to lock. And then what you do is you click this freeze panes button and you click freeze panes. And now our employees always stay on the side there when we go side to side. And when we go up and down, the top row stays there. So you really want to take advantage of that. If you got a really old version of Excel, it's not going to let you do that. And I don't know what to say, you might want to upgrade Excel. So here we've got, what I did is I included 1, 2, 3, 4 different employees. Let's just show you some different scenarios on how this would work. So what you do is you just start out giving the employees information. This optional plan start month, you only use that if you did not have a group plan all year round, and you could put like, hey, we started the plan in March, and then that would make sense as far as why you wouldn't be no one would have coverage before March, or for an example. But most groups have offered coverage all year round, so you're not going to use that column. So for each employee, you're going to go ahead and put in an offer of coverage code. What's going on with this guy? For everybody. And oops, there we go. And then we're going to, you're going to put an offered coverage code, a employee required contribution potentially, and then a safe harbor code. So these codes can be confusing, but what it is, there's a tab here that explains all of the different codes that you would use. So I want to go through the offer coverage codes first. So right here in this section, this is where for each employee we indicate basically whether or not we offered them coverage or not. So if we qualified for that simplified reporting, the qualifying offer, we can use 1A. So if we offered coverage to an employee and the cost of the coverage is less than 9.65% of the federal poverty level, which we determined to be $97.38 for 2017, then we can use code 1A. If we offered coverage to the employee and it was not less than the federal poverty level, then what we're going to want to use is code 1E. That assumes we offered the coverage to the employee and the family members, which most people do. There will be times when you don't offer coverage. Code 1H would be that you did not offer coverage. And the reason you didn't offer coverage might have been because the employee didn't work there. Maybe they're part-time. Maybe they're a new hire and they're in the probationary period. We'll get to the explanation of why you didn't offer coverage. That's in the safe harbor code section. But essentially, in this section where you offer the offer coverage section, you're either going to be using 1H if you did not offer coverage. If you offered coverage and it was less than federal poverty level and you're using the qualifying offer method, you can use 1A. And if you're offering coverage and maybe it's not less than federal poverty level, you can use 1E. Okay, so I'm sorry, going back here to Joe. So for him, I was going to use the 1A code. If you use 1A, I don't know why it's grayed right now, then what's going to happen is I'm just going to say that this employee, we offered him coverage that was affordable for the whole year. when you use that code 1A, as I mentioned earlier, all you have to do is put in the offer of coverage code. You don't have to tell the government what you charge them for the coverage, because by using 1A, you're telling them you charge them less than the federal poverty level, so it doesn't matter what you charge them. And then when you use 1A, you don't have to put any safe harbor code, because you're just telling the government, I offered this guy coverage. It was affordable based on the federal poverty level, so therefore I can't be penalized for this person, right? Remember, the B part talks about whether or not they enrolled it. So this section here, we're just talking about what the employer was doing. You know, did you offer coverage? Was it affordable? And also, if you did not offer coverage, then we'll talk about that here. So we've got the next example would be Betty, and this is an example of someone that was hired mid-year. So Betty was hired in July, and this group has she was hired July 1st, but they have a 2-month probationary period. So she didn't actually come on coverage until September 1st. So for Betty, we're going to use 1H all the way until she was offered coverage, because for January to June, she didn't work for the company. July and August, she did work, but she was in that probationary period. And then starting September, she was offered coverage. So in this example, I'm assuming that the coverage was not was more than the federal poverty level. So then I had to actually, we're not using 1A for the offer of coverage code, we're using 1E. So that's why I have to put in the cost of the coverage for the months that she was offered it. And then this is important here to use the safe harbor code. So for this particular employee, we're not offering coverage. And so we need to tell the government why we're not offering coverage so we don't get penalized. So here we go. We got to click on this tab here, the safe harbor codes. And this is all the different codes you might use to kind of explain why you didn't offer coverage. So 2A is employee not employed during the month. So that's Betty for until July, we're using 2A, right? Yep, 2A all the way until July, because we didn't offer coverage, but she didn't work here, so we're not getting penalized. That's what the safe harbor code's all about. 2B would be safe harbor code if they weren't a full-time employee. That doesn't apply to Betty, but it's going to apply to some other people. And that'd be a reason why you didn't offer them coverage. They're only working 10 hours a week or 20 hours a week, something under 30. 2C would be if they enrolled in the coverage offered, and we use that if we're not using 2A. So we're going to use that for Betty when she enrolls. 2D is employees in a limited non-assessment period. So use that for employees that are in their probationary period or measurement period. Okay. And 2E has to do with some union coverages and so forth. So when we get to Betty here, as I mentioned, January through June, she didn't work here, so we're using 2A safe harbor. That's the safe harbor saying she didn't work here. July and August, she did work there. We still didn't offer coverage because 2D, she is in a limited non-assessment period. She's in a new hire probation period. And then we offered her coverage September, and she took it, so we used 2C. That's just basically saying that, employee enrolled in health coverage offered. So that's pretty, so you kind of like see how this makes sense. You basically have to go through every month and explain what happened. Did you offer him coverage or not? If you offered him coverage, what was the cost? If you're using 1A, saying you offered him coverage that was less than the federal poverty level, then you don't need to tell him what the cost was. But if it was more, then you do. And then you explain if you offered him coverage, then you indicate if they enrolled. This next one is Kim opt-out. So this is an employee for the whole year. You offered her coverage, 1E. You're saying that the cost of the coverage was $100. So that's more of that federal poverty level. So we're not using the 1A, we're using 1E. and then she opted out. Okay, so she opted out. We used 2H. 2H is the affordability safe harbor we were talking about, rate of pay. So what we're saying is we offered her coverage. It was $100 a month. $100 a month is less than 9.69% of her rate of pay. So a lot of times people say, well, she enrolled through a spouse, or she went on Medicaid, or what. Government's not asking you what she did as far as opting out of coverage. They're just wanting to know about you, the employer. Did you offer her coverage that was affordable? And that's all we're talking about. If she opts out, we just have to say that we offered her coverage and it was affordable. Then the employer's not being penalized. What she ended up doing, if she was uninsured, was on Medicaid, was on her parents' plan, was on spouse plan, was covered through the government, Medicare, any of that stuff, that's a totally different subject. That's her own personal situation that then she'll have to report on her personal taxes, and that has to go with the individual mandate. This reporting is all about the employer mandate mainly, at least this section of it here. The final example I want to go through is Kim. She was working part-time and then she switched to full-time. And in this example, she switched to full-time July 1st, but then she still had to work full-time for 2 months before she was eligible to go on the insurance. So just like Betty, she wasn't offered coverage until September. And here we've got, we're charging her $100 a month. So that matters once we start offering her coverage. And then the way the safe harbor codes work is for her 2B, because she's part-time, until she started working. Then she went to the limited non-assessment period, that's 2D. And then she enrolled in the coverage in September. If she didn't enroll in the coverage in September, we would use this 2H code for her, saying we offered her coverage, it was affordable, but she didn't take it. All right, so as I mentioned, all of this information in the spreadsheet, when you upload it, it'll get mapped over to the actual form that you'll send to the employee in the IRS. The next part I'm going to go over is this covered employees section, covered individuals section. This is only required for employers that are self-insured, and this is actually going to tell if the people were enrolled or not. And so this is where you would include the name of the employees, and you check the boxes, or you'd say whether or not they had coverage. And this is the only section you'd cover. You'd include the family members of the employees, so covered individuals. So if you're not self-insured, then you don't worry about the family members at all, and you stop here at part 2. So the self-insured part, this is a different tab. And so this is where you'd actually indicate the employees and if they're covered, what months they actually were on the coverage. So the way you do it, usually you just cut and paste the employees from the other page, name, social security number, and then what you do is you have to go through here and line them up, like match them up to the employee. So Joe, full year, he's himself. What would make more sense is on Kim. Kim has a daughter, and so Kim's daughter, you map back to Kim, so you'd select Kim. When you use this drop down, sometimes it looks blank. Hit the up arrow, then you'll see the rest of the employees there. And so this is real. Oops. So Kim, you got to map Kim's daughter to Kim. All right. And then once again, you can use that trick right here, freeze panes, so that we don't get confused. And then this is where we just indicate the months that they had coverage. So remember, Joe had coverage the whole time, and then these other two came on September and had coverage for the rest of the year. So you'll get really familiar with this spreadsheet. As I mentioned, you want to definitely use that freeze pane tool to make it easier on you. Once it's all said and done, you want to hit save. Make sure you know where you save it to. And then it's time to upload and create the forms. So the way you do that is you go to the website MyWave Connect. And you should all have received a login to this from our company at some point. If not, let us know. We'll email you the new login. And when you log into MyWave Connect, this is an excellent website. It has tons of information about employee benefits. wellness programs, flyers on flu prevention, disease, illness, healthcare reform, ERISA. So awesome tool. Highly recommend you take advantage of this. But right now we're focused on this reporting. So what you do is you want to go ahead and click on the wrench tools section. What you'll do, and then you'll scroll down to ACA reporting. Click on this. It's going to pop up a new window. So if you have any pop-up blocker things, make sure you disable those. What you're going to do is you're going to browse. You're going to find the workbook you saved, and then you're going to upload it. What's going to happen after it uploads, it's going to email you a link to download the forms, and it'll have all the forms for you can download and print. As I mentioned, if you have any questions or issues or hiccups when you're trying to upload, let us know. Allie Roundtree at our office is an expert at this. She can help you go through this. So let's see here. Coming to the conclusion of the report, we're going to link up the reporting tools and instructions. We can email those to you. We'll send them out in an email. As I mentioned, you go into the MyWave Connect, you upload the forms, then it emails the forms to you. And as I mentioned, you need to mail the forms to each employee no later than January 31st, 2018. And then you also need to mail all of the forms to the IRS no later than February 28th, 2018. And if for companies headquartered in Washington, you mail it to the IRS website. I'm sorry, the IRS PO box in Missouri. This address changed from last year, so just make sure you follow the directions on the IRS website. Any questions, give us a call. We're happy to help you out. You can talk to Dave Maddock or also Allie Roundtree. They're two compliance experts at Mattock Associates. Thanks for your time, and good luck to everybody.